keep it going and talk more about markets. Sudeep Shah, DVP Head Technical and Derivatives Research Desk at SBI Securities, joining in with us. Sudeep, very good afternoon. Thank you so much for joining in with us. And what's your thought on the market right today? A bit of a range-bound move is what we could see, at least for the market, though right now managing to hold on to some bit of a green. What's your thought on the benchmark indices, as well as how could one be reading the run-up that we've again started seeing in the mid and small cap?
Yeah, good afternoon, Vinny. See, what we're seeing is in the last few days, it's a complete mid-cap and small-cap led show. And that is the reason Nifty stocks are in a range now. So overall, and also in the last 3 4 days, any dip to 22,300 has been bought. So I feel overall the 22,300, 22,350 zone will act as a strong support. If we even add the derivative data to this, then there is strong put writing happening in 22,300, 22,400 strikes. So that means that this zone is a safe support zone, 22,300, 22,350. On the upside now, the real problem is 22,500 call writers. So there we are not seeing any unwinding. So the moment Nifty crosses 22,520, that would lead to those call writers to unwind their positions, and then we would see a continuation of the up move up to 22,700. So for me, 22,300, 350 zone, a strong support. 22,520, the resistance needs to cross. But between that, as in when that happens, between that during that time period, what we feel is that it's going to be an individual stock picking show that is going to carry on. And on a day-to-day basis, we are seeing different sectors coming up. So that shows a healthy market breadth. And overall, I feel even from a mid-cap and a small-cap standpoint, mid-cap indices are looking more stronger than the small-cap counterpart now. And that is the reason we feel there is better relative strength over there. And we prefer picking certain mid-caps ahead of small-cap stocks.
Okay, right. That's the word on mid and small cap. Sudeep, let's talk about a couple of names today that have been buzzing. Whether you look at something like Cochin Shipyard, Garden Reach, or even Mascow Dock, we've seen a sharp run-up coming in the stocks. What's the view on this one? If you could read the charts and tell us how are they looking like? Is it still something that one should look to enter in any of these names?
Absolutely. See, between Cochin Shipyard, Garden Reach, and the other third stock that you just mentioned, I feel GRSE and Cochin Shipyard looks much better on chart, and there's a consolidation breakout happening in both the stocks. So, case in point now, GRSE, that stock was in consolidation since last 2.5 to 3 months, and today we have seen a breakout with volumes on the upside. So, overall, from here on for GRSE, 840, 835 zone will act as a strong support, and till the time this zone is held, we feel that this current momentum in the defense names would take the stock up to 930, 950 on the upside. And for Cochin Shipyard, that stock is a fresh life high. So the entire consolidation between January to March, between the 700, 730 on the downside and 960 on the upside, that has been taken out a couple of days back, backed by strong volumes and higher delivery markings also. And in the last 3 sessions, we have seen higher top, higher bottom formation also on the daily chart. So I feel this renewed momentum in this in the entire space. If you see the charts here on Cochin, it looks like that the stock is headed up to 1180, 1230 on the upside, and on the downside, 980 zone now will act as a safe support.
Taken. Hold that thought, Sudeep. I just wanted to mark the important commentary which is coming in from the Indian Oil Secretary. They're talking about how the higher oil prices is a cause of concern. Indian Oil Secretary is also saying that it, of course, reflects the geopolitical action that's happening, but the companies will take appropriate decision on fuel prices if the global oil prices stay high for more than a month. All of that commentary will come up for you on the screen. But in the meantime, let's see if there is an impact in the oil marketing names. For instance, HPCL, BPCL, IOCL, are they reacting at all? And, Sudeep, what's your view on OMCs on the charts?
Good afternoon, Anisha. Anisha, if you see HPCL, BPCL, and ONGC, specifically HPCL, right from the time in late February when the crude prices started rebounding from $79, $80, that from that time onwards, HPCL has seen some negative momentum, downward momentum on the charts, and from 560, 550 zone were acting as a resistance, and right now the stock is already, it's around 480. So much of the crude price rise is already in the price, in the stock price of the charts in HPCL. But comparatively, if you see, BPCL looks more stronger. BPCL has not fallen much from its life highs, 660. It's just 3.5% down. So relative strength there in BPCL, it's much better, and it's even trading above its short-term moving averages. So overall, if I have to choose between HPCL and BPCL, 500 BPCL would be my preferred pick, and 595, 590 zone will act as a support here, and the stock, if you could head up to 635, 640, where there could be some resistance.
Sudeep, thank you so much for joining in with us this afternoon on ET Now and giving us your view on the markets as well as individual stock names. Thank you so much for that. But on
If you like this video, then like, share and subscribe to ET Now.